anyone on YouTube or anyone like that, just click the copy or subscribe button and follow my stuff on YouTube. If you're not already in one of my chats, we have the likes of a Discord chat here where we talk about the markets, we talk about our trades. And one of the things we talked about this morning was Elon Musk and Dogecoin. So Elon has had a tweet here this morning. Tesla will make some merch buyable with Doge and see how it goes. So this is pretty good for Dogecoin. So we're going to go into a crypto here in a little while, but that was the latest tweet from Elon. But if you're not in the chats, yes, that's why Doge is flying. Yes. So if you're not in the chats, let me know. I will send you the link. If you're here and you're on this webinar and you're not in the chat group there, James or someone will pop up the link for you guys. So one of the things I want to start off here is some stocks first. And before I go into them, let's have a look at the pre-market. So if we have a look at Apple, so Apple pre-market is slightly up. So it's $1 up. So we're slightly up on the pre-market on Apple. So I'm only going to do sort of the big six. Okay, so I'm only going to do the big six. So Apple, then we have Amazon. And all these lines here was because I was doing a webinar on dollar cost averaging. So that's why all this was here. So I'll be deleting all those lines. Then we have Amazon. Now if we look at this Amazon, the pre-market, which is here 3367, so which means it's dropped a little bit. So it's dropped a little bit there on that. So we know the pre-market on Apple is slightly up, and Amazon is down probably 1 or 2%. If we look at Facebook, Facebook's down a couple of dollars as well, so 0.5%, I suppose. If we look at Microsoft is also down $3 and a percent. If we look at Google is down by about $7, $9, so which means then it's also down a couple of percent as well. Netflix down $4 here, so that's down a little bit as well, a couple of percent. And then we have Tesla, and Tesla is down $10. Okay, so this means across the board. So are we expecting today to be a buying day or a selling day across the board? Mark, that's a different conversation for a different day. That's the it was the SEC. They should be the ones that's policing that. But again, it is what it is. He's just announcing something, the same as any company announced stuff. So we would expect that to happen. Eduardo, what time is the Fed meeting? Is that today or tomorrow? So we're expecting all these to drop. So I'd expect a selling day today. Now, with the pre-market the way it is, I don't envision seeing these tomorrow. So I don't envision seeing this happening, this changing massively today. So I'd expect today to be a selling day. So if we look at, say, the Nasdaq, we can see that we have a little bit of a selling day here so far. Same with the S&P, we have a little bit of a selling day, and the same with the Dow. The Dow is a little doji bar. But looking at the big five, I would expect this to be a selling day. Okay, so I'd expect the market to continue. Now, how much downside is in this market? Who knows? No idea at the present moment, but we know there is a little bit of selling power. Now, if we're looking at, say, the Nasdaq, we're expecting Nasdaq to get to either of these two levels, this one here or this one. So that's exactly where I would expect it to get to. Whether it'll make a low or no is a different matter. But also, if I'll zoom out here, we do have a trend line here on this. So this could very well come back to this trend line. We have a trend line here across this. All these drops are pretty uniform if we look at them. So if it comes back to here, this looks like a half decent area for this to come back to. And if we get in there, there's a potential buy on the likes of that. So am I looking to jump in on the likes of the Nasdaq at the minute? No. But if we're expecting it to come down to this level, or even back down to this level, there are potential trades here to the downside. So we took this trade here as a buy. So we took this as a buy. Now we can see the market, it's hit its head once, it's hit its head twice, and it's hit its head 3 times. So are we now closing this position? Or should we try to take other positions in the opposite direction? What do you think we should do at this particular point? Should we take our running and run? Should we try and take a short on this and keep the 2 positions opened? Do we just leave the long opened and just let it run, or do we close it? So there's the 3 options. So are we closing the position? Are we taking a position short? Or are we leaving it alone? So some people are saying wait and see. Some people are saying take a short. Someone said take a short and keep both. Someone said take no short and close the long. Someone saying a short. Now, there's a couple of things you have to sort of work out. Are you expecting this low to be taken out? Yes or no? That's the first thing. If you expect this low to be taken out, then you are better off closing your position. So if you expect this low to be taken out here, you're better off closing that position. So you're expecting this to come down, and then eventually break it. You're better off closing that position. If you're someone who expects this to come down a little bit further, and maybe a little bit further down to here, and then bounce off, then you leave that position open. Okay, and that's the ideal scenario. If you're someone who thinks that it will go down and hit either of these levels, so if I get this, it'll hit either of these levels, either of those 2 levels, the little red one or the little black one here, come down to either of those levels, you can say that I'm looking to short this down to here. So I'm looking to short that down into that area. So we're looking to short this down into that area. And then when it hits that area, I'm then looking to buy or leave my original long position alone, one or the other. Now, with doing the likes of that, there's a couple of red flags. And can anyone tell me the red flags that are happening here? Can anyone tell me any of the red flags that are happening? Probably about 3 of them. It's made a lower high. Absolutely, that's the first red flag here. Okay, that's the first one. Anything else? Anyone got any other red flags? It's also consolidated through this area, hasn't it? Okay. And then the last one then, well done, is a head and shoulders pattern. So anyone who doesn't know what a head and shoulders pattern is, so a head and shoulders pattern is this. And with a head and shoulders pattern, the idea is that here's the neckline. And we measure from there to there. So we measure from there to there. And then once it breaks the neckline here, it should theoretically get a 1-to-1. So see that distance from there to there should be the same distance from there to there. So that's what a head and shoulders pattern is. This here is the left shoulder. This here is the head, and then this here is the right shoulder. Okay, so we have a lot of selling signals going on here. So there's an awful lot of selling signals going on. So which means then if you are of the sound mind and you expect it to get back into this black box or even down to here, okay, down to the trend line, there is a potential short on that. So am I someone who is going, no, this is blindly going up? No, because the pattern here doesn't tell me this is blindly going up. I still understand that the overall trajectory of the market is going up. And I expect the overall trajectory of the market to continue going up. All we have to do is work out where is the best place to trade. Where's the best place to trade? And we worked out here that we had a bounce there and we had a retest there. So that was at that particular point, the best place to get in. Now, did it go the whole way up and hit our 3-to-1? Nope. So we're in a position here. Now, if you close this position, I'm not going to give out to you guys. I'm not going to say, well, look, why are you closing your trade? You're jumping out of it early. I understand that you have a bit of manipulation from the likes of the Fed, whether they're going to continue with the quantitative easing, whether they're going to start slowing it down, what's going to happen with the likes of that, because that's what the big sort of thing is. They're going to slow down with the quantitative easing, with the buyback of the stocks. The second thing then is the market, is it artificially overextended? And does the market need an absolute proper correction? And the answer to all those questions is absolutely yes, it does. And again, I want to have some liquid cash there available. So once the market drops, that I can actually buy up some more. And that's the idea. Now, whether we're going to get the whole way down to here, whether it's going to go the whole way down to here, or whether it's going to take off and go up like this, I don't necessarily know. But historically, we get this phase 2 happening in mid-January. We're supposed to be in the midst of a Christmas rally. So this is literally the Christmas rally should be the next 14 days. So that's what we should be doing. But this year seems to be a little bit different. So it's failed to happen once in 2018 in the last 20 years. So it looks like it'll fail to happen twice. So let's see if we get a strong run just before Christmas. But again, it all comes down to what's going on with the likes of the Fed, what they're going to do. Are they going to the actual quantitative easing? Are they going to hike interest rates? And also keep an eye out on the bond yields. So the bond yields will drive this market down massively as well. Okay, so if we're looking to short this, we have a little horizontal level there. Okay, now I know we're talking about hypotheticals, so we can't guarantee that this is going to play out like this, but we now need to drop down to the smaller time frame. So imagine we're expecting the market to drop down into either of these. Either of those, either that red line there or this trend line. Okay, so we're expecting the market to come down to there. So what we have to do then is we have to then drop down to the smaller time frame and read the charts ahead of us. So if we go down to the 4-hour, we can see here, I'm going to bring this down, we can see that it hit its head, hit its head, hit its head, hit its head, and come back down. So we can see it's hit the floor, went up, hit the floor, gone up, hit the ceiling, come back down. Now, this is not the ideal scenario here. I would have liked to have seen that come down a little bit further. And then I wanted to come back to there. So see this little green bar? I would like to see that being a red bar by the end of this 4-hour bar, come down to about here and then slowly go back. And if it goes back to there and it gives me a price action bar, a nice price action bar, then I'll be looking to short it down into either this level or the next trend line. Does that make sense? Has anyone got any questions on the likes of that? So again, back up to the daily chart. If we expect this to continue going down into sort of this area, we need to break and then retest on this smaller, shallower level. So drop down to the 4-hour. drop down to the 4 hour, wait for the break, and then retest. Now it may or may not come back to there either. It may not come back to there either. Unfortunately, with these levels, there's no real hard and fast rule with them. You have to try and see which one is respected a little bit more. And there potentially. So it could come back to either of those two. But that one for me is a little bit better than the likes of this, but it could come back up to this one. And again, if it gives us a little price action bar, then we're looking to short it. Okay, but again, that's if you have to trade it. Now remember, guys, you do not have to trade this. You do not have to jump into the market. You can just sit pretty and watch and see how it plays out. You don't have to be in this market all the time. You don't have to be active all single time, every single time. You don't have to be in it. Just sit down, relax. Patience is a virtue. Some of the best trades I've ever taken is by sitting on the sidelines and not doing absolutely anything. Why? Because how many times you go, oh, I'm expecting this to go up, and you put a sort of a virtual trade on, and you go, well, there was my entry, there's my stop loss, and then you get stopped out of it. Why? Because this market is a little bit uncertain. It's a little bit uncertain here at the moment. So just keep an eye out on it, and it's something. Now the same on the S&P, literally the same, needed to break and retest the short side, and then we're looking for it to come down. We're either looking for it to come down to this one or this level, either of those two levels. And this one looks a little bit stronger, 1, 2. Okay, if it comes down to here, that'll be the third touch. Looks a little bit better. And could anyone have spotted this drop happening? Absolutely. Look at the triple top here. 1, 2, 3. And then the same with the Dow. The Dow is literally the same. And would probably expect the Dow to even get back into this level here again. Potentially. But only time will tell on this one. But at least this level, if not this one. So that would be the ideal scenario back to here. And if I got back to there, we have a pretty damn strong level. So 1, 2, 3, 4, 5. Okay, we have 5 touches on this. If it comes back to here, that would be where we're looking to buy it again. Now, the German DAX, we talked about a potential trade on the German DAX before, and it hasn't really come back far enough for us yet. Very straight. Out there, drop down to the 4 hour. It hasn't really pulled back here far enough for me, but again, some people would have taken that trade there. So see this little low test bar, we have a bounce and retest. It's not strong enough for me. I think the level's a little bit lower, so I wouldn't have taken it. But did anyone take that? Did anyone take that trade there? Entry there. Stop loss there, 0.6, and I went up to there, which is 1%. So 1.5 to 1. Yes, you're still in it. 1.5 to 1. Okay. Now again, if the likes of the US market drops, I expect the European market here to drop. So depending on where your stop loss is, I wouldn't be still in this. I'd be aggressively moving my stop loss or taking my trade. If you expect the US market to drop, I'd fully expect the European market to drop as well. But again, it is what it is. You open at 15.11, so down here. Yeah, good trade. Depending on how much of a drop we have on the likes of the US market, we could potentially see this coming back to a double bottom here. Okay, so potentially coming back to a double bottom, but it could happen very, very easily. Or I said double bottom, 1, 2, 3, 4 touches. So that there was a good place to get in back at that level. And people talk about trading being hard. Look, that's not hard. Look at that level. Absolutely. Stevie Wonder could see that one. Okay, and that's all. As if you had to be looking at this market at that particular time, There was a trade there. That's all. It's whether you were looking at the market at the correct time. The UK100. So we talked about this on the Sunday webinar. We talked about this, and Stevie Wonder can see trades now. So we can see this. We had divergence. We talked about this having a double top. We had a nice price action bar. Did anyone take this trade? Yeah, no stop loss had to be there. So that's 1%. This trade actually went down. So this is a 1% trade. It actually went down 1.2. Okay, so anyone who took that trade, well done. Now, you may have the original trade opened. Now, I talked about taking profit at that horizontal, so we wanted to take profit just slightly above it. So that's where to take profit. Now, it didn't quite hit it. It didn't quite hit it. And we see the UK100 today being a little bit bullish. Okay, so if you took this trade at the moment, you are at this particular point. If you risk 100 quid, you're 60 quid up at this present moment in time. Okay, so it is, if you expect this market to continue dropping, you expect US to continue dropping, then we'd probably expect this to drop a little bit more as well. And has anyone ever had confidence, well, since Brexit, of the UK market going up and all the rest of the markets going down? Probably not. So if the rest of the markets continue to drop, we'd expect this to drop as well. But anyone who took that trade from the Sunday webinar, well done, good trade, keep up the work, good work. And it's something that was very, very simple for us there. Okay. Anyone got any questions on it? Those, just kind of a quick look at the China market. So we had a big rejection of this horizontal level again. So it's something we've talked about in the group. So this rejection of this horizontal line, we had a big old horizontal or a high test bar. And the problem with this high test bar is that it's too big. It's too big for me to be looking to trade that. It's not, for me, it's not a good trade. So for me, this is not a good trade. It wasn't something that I was looking at because the risk to reward wasn't good enough there. But again, we have that trade a little bit higher. So entry there, stop loss above it. So that's 3.3%. So we have to go into about 10% for us to hit profit. Here are 3 to 1. And our 3 to 1 is exactly at this floor here. So would I be trading that the whole way to the floor? No, not at all. Where do you think we should be trading this? If we took a short on this, if you guys took a short on this, where do you think we should be trading this to? Where is the best area for us to be looking at this? In your opinion, where would our take profit be? Because down to the very bottom is not the correct area. So 15.15. Okay, so let's have a look at that. 15.15. Nope. 15.25. Close enough. 14.77. Nope. So the idea is, I have it already drawn out there. Already drawn it out there. Look at this big red line. See this big red line? See that one? Slightly above that red line. You didn't have to see the numbers. It's there already. I have it drawn out for you. Bounce once, twice, 3 times. So that's where we should be looking to take a profit, just before that red line. Or what you do at that particular point is you par close the position and start moving your stop loss down. Start moving your stop loss into profit. Okay, but That's once this trade is profitable. Once we're in profit, you par close the position, and then if it continues going down, you're in bonus territory. But at that particular moment, then no. So there are positions there to be taken to the downside. And the one on Sunday was on the German DAX. We have one yesterday, which we talked about on the chart on that as well. So there was another trade on this as well. So there are positions they're setting up now. Whether they will hit profit or not, I do not know. But remember, we're not going with the trends, so we're not expecting the markets to continue dropping exponentially. We expect them to hit a certain point and then turn around. So anyone got any questions on the likes of that before we jump over to crypto? Or any particular stock that they really want me to have a quick look at before we jump on to crypto? So that's a high test bar. So it doesn't look like anyone has much. Okay. Gary's service now, is that actually an actual? Is that an actual stock? Or are you seeing something? Now, please. Whoa, calm down. Capital letters. Horizontal in here. But this looks very similar to one of the indices, isn't it? It looks very similar to the likes of the Nasdaq, isn't it? Pretty much identical. Left shoulder, head, any of these can be the right shoulder. We have a horizontal level here, and then we have the overall trend line. So very similar to the likes of the Nasdaq. For me, the trade here, it's missed. It's missed at the moment. For anyone who's looking to trade this has to come back into the likes of that area for me to be looking to trade that. It has to come back into that area for me to be trading it. But at the minute, then no, not at all. Not at all. We've sort of missed the boat on this. You could potentially drop down to the smaller time frame. But again, it's not massively jumping out at me. There's no support levels. It has to come back into this one for a support level here for the bounce back to on the 4 hour. So no, there's nothing here jumping out at us. Yes, the stock is trending nicely. It's a good one to sort of have on our list. It's definitely one that we could add. But not at the moment. We've missed the boat already. Okay, so let's have a quick look at the likes of Doge. So we now can see Doge is up 26%. I'm only down 45% on it now. It's fine. Thanks, Elon. So as we can see here, this is the level that we had our level at, and whether Elon is watching these charts or not, whether he's tweeting at these levels because he's trying to get the market to go in a particular direction or not, who knows? But again, gold, oil, and wheat. Yes, you need to remind me at the end. So remind me at about 10 to, and I will go through all three of those. So there's no coincidence that this is after bouncing here at this level, is there? There's no coincidence that it's after bouncing at this particular moment here. Why? Because it's sitting on its floor. that's sitting on the floor. You also have a tweet from sort of the king of crypto himself. And just to bring up the tweet again that he said was here. Okay, Tesla will make some merch viable with Doge and see how it goes. Okay, so whether he's actually been truthful on this or not, who actually knows? But again, this is the first sort of tweet surrounding he's done since this time. What was it? About 6 months ago was the last time he started tweeting about Doge. So it is for anyone holding Doge. This is quite important. Why? Because it was dying a slow death, if being honest. But again, you see one person has one tweet, and all of a sudden this is spiked 25%. So for all the crypto heads out there wondering why crypto is nowhere near being incorporated at the minute, well, this is one of the reasons why. Why? Because it can be manipulated so badly at the present moment in time. Now, once we get 5 or 10 years down the line and the market cap has gone so big here, someone coming out saying something or something like that, it doesn't really matter to it. But at the present moment in time, this is really important to know that we may have some of these coins that literally go back to zero. Okay, but also what we need to do is make sure that we are diversifying into other coins as well. So Bloomberg has come up with a post this week that 90% of cryptos will disappear. What's your thoughts on the likes of this? But again, how many of them will actually be incorporated? So it comes down to how many will actually be incorporated into proper, whether it's gaming, whether it's actually data, whether it's whatever it's into infrastructure. Now, not all of them will be. Now, some of them will. Some of them are absolutely flying. Some of them will be in orbit, and some of the technology behind it will be great. So the idea is that yes, it's all speculation. What was it? One of the big investors come out and said that Bitcoin will go to zero. Well, looking at it now, it's at 66. It's almost 60,000. They were quite wrong, weren't they? So again, we're all talking about speculation. We're talking about it. One of the guys that we talked about was Plan B. Plan B said that the 57,000 mark was going to be broken before September. And I was like, yeah, it'll be. I very much doubt it, but we will see. And then on the last day of September, it hit it and broke it. So then he got a huge traction because it was supposed to hit 100,000 before the end of the year or before the end of October. I can't think it was, and it didn't hit it. And then someone tweeted, "Well, I wonder what Plan C was," or someone changed their name to Plan C, and he blocked them. So again, it's all down to your interpretation of what your plan is. Now, was he wrong? Yes, because they put a time period on it. But is he wrong overall? Probably not, or she for that matter. And probably not. We will probably see Bitcoin hitting 100,000. I don't see any reason why not. But in what time plan? In what time period? I have no idea. No idea. It could happen next week. It could happen in 10 years' time. So, and that's the problem with the likes of these cryptos, is that we do not know what's being incorporated at the minute. With the likes of Elon, if he's pushing the likes of crypto, anything he's ever turned his hand to was sort of worked out, hasn't it? So again, you're sort of backing the person as well behind it. It's Plan M, McDonald's. But because it's an opinion from a financial journal, would it be more reliable? But again, there's not, unless you have facts and stats behind stuff. it's written from that person's opinion. So the same as it's my opinion. Because we did a webinar on Sunday, and we talked about everyone talking about a huge crash on the likes of indices. Now I will trade what I see. So at that particular point, I didn't see a crash in the charts. Do I still see a crash in the charts? No, I see a potential phase 2 to pull back to the trend line or a horizontal, and then go on from there. But the idea is you have your long-term goal, okay? You then read and look into what other people are thinking and specialist traders in particular areas, and see if there two of you guys have aligned. And if you can get as much information aligned with your one, then you stick to your plan, okay? And that's the idea. You're getting as much information as you can. But will some of the cryptos go back to zero? Of course they will, absolutely. But hopefully it's the ones that we don't hold. So it's come back to this horizontal level. We've had a 25% jump off one tweet. If someone else could get Jack Dorsey to tweet or something about Doge or Cardano, I would muchly appreciate it. Kashi, can you speak to Jack Dorsey for us and see what you can do? Yeah, I'm just sending out a little tweet as well. That'd be lovely. And if we could get someone to jump on Donald Trump as well to give a little tweet, we'll get all these moving again. Have a look at the likes of BTC. So BTC at the present, see the way the market is moving. Not so long ago, we were 100% up on all our positions. Now 11% up. And if you look at these green lines, you can actually see my positions that I've bought in these. We actually have an order at 42. What's that there? 43.20. We have an order, so if it comes down there, I'll be triggered in at this order. I also have another order here again at 30,000, and then I have another order here again at 20,000. So if it comes back down to these levels, I'll be happy to potentially buy these again. Okay, so the idea is to put these levels in place that you don't have to be near the market to place these trades. You don't have to be near the market to place these trades. So we talked about this sort of level, but look, broke and retested. So it broke and retested this area. So if we look, it came down, hit the floor, bounced up, went down, hit its head, and then come back down. So anyone who has a sort of trading account that's not FCA regulated, you could have actually taken that short off that point. Entry there below it, stop lot there would have been probably above that line, and then look, you'd be at least 1-to-1 up if you took that to the downside there. So there's loads of trading opportunities on the likes of these. We just have to make sure that we are triggered in at the correct areas. So what's the likelihood of this going down to that level again? What would the likelihood of that going down again be? Oh, we have percentages here and everything. Okay, cool. Someone's feeling confident. 70%. Okay. I like the percentage there. And oh, look, we have another one now. Wayne is saying 100%. There's a high probability of that coming down. Cassie's saying 50-50. I would imagine it's much higher than 50%. We have an overall trend going down. That's where the level is. And when we look at this, we actually have sort of a zone here rather than a hard level. So we'll bounce here once. So I'll get the actual animations here. So we actually have a bounce there once, a bounce twice, 3 times, 4 times, 5 times. Okay, so that's off this horizontal level. So that's off that one there. So the horizontal level. But also we have a bounce here once, twice, 3 times, 4 times. So it may even come back to this little soft level here. So we actually have a zone here rather than a hard level. So see these 2 areas? And if it comes back down to there into one of these zones, there is a potential buying zone. Okay, so that's something that we need to look at if we're looking to trade. If we're looking to trade this at the moment, so we are back at sort of a buying zone area. We're at a buying zone area if we're looking to jump into this, and if it comes down there. Now I'm going to play devil's advocate here. So we've said that there's between a 70, well, some people said 50, so 50 to 100% chance of that going down. What's the probability of this going down to the 28,000 level again? I'll pop that down there so we can actually see it properly. What's the probability of it going down there, in your opinion? Give me percentages this time. So let's see what the consensus is across the board. Okay, let's see what the consensus is here. 40%, 70%, 20%, 43, 50, 50. Higher. Gary doesn't understand the word percentage. Okay. 50-50. Gary said lol. Okay, so at this particular moment, do I think it'll hit this down here? Probably not. Probably not. I don't expect it to get down this far. Probably, if it's going to break here, it's probably going to get into this sort of no man's land, and then people will buy it up. I don't expect it to hit the 30,000, but again, it's quite easily could. So we could end up having a bar like this. See this one? We had a huge sell-off, hit the price, and then took off again. If it hits a 30, that's the kind of bar that I would expect to see. So if it hits this 30K mark, see that bar? That's the kind of bar. So how many orders will be sitting at this 30,000 mark here? How many orders will be sitting there? How many limit orders will be there that if it gets to that point, all of a sudden we will see a big, huge buy on it? Did I get triggered in here? No, because I didn't actually have that order on that particular one. So I have that order in place now, but I didn't have it in order. I didn't have that order in place, but I have this one. I have that one order in place that's in there months, and this one here is about 6 months old. So I have both of those in place, and I actually placed this order a couple of days after this came down and touched. So it didn't get triggered. Let's have a quick look at Cardano as well. Let's have a look at ADA and have a look at Matic. Okay, so we talked about this one here, and look, the same happened. It broke and retested this level. Look, broke and retested, and it's been coming down nicely into sort of that area. I would expect it to come down and hit this level again. I still have this order, so this order wasn't triggered here. It wasn't triggered here, but I still have this order at 1.1. I still have the order in place. We suggested that potentially put that order about 1.7, 1.07, and just to make sure you're triggered in. But again, once it hits that floor, I'd expect some sort of bounce to the upside. Why? Because we've had 1, 2, 3, 4, 5, 6. This would be the 7th time touched. And then the next one, Matic, because Matic has been pretty strong as of late. Okay, it's been pretty strong as of late, where the other ones have all been sort of in a downward trend. Matic hasn't. Did I get triggered in on this one? So let me see. 1.722. 1.66. Let me go back to the orders here and portfolio. So the orders, see if we still have a Matic order. Nope, didn't put an order in there. Didn't have an order on Matic. Okay, so slightly up on Matic. So we got in, I got in somewhere around here. So potential order on that there at 1.7. So anyone who placed that order, you wouldn't have been triggered in because of the spread. It would have had to go down a little further. But again, it depends on whether we're expecting, if you're expecting this now to eventually bounce there, or expecting this to continue going down. And looking at the overall crypto space, we'd probably expect this to go down. But again, for how much, how long? And then the last one, link before we do oil, silver, and wheat. I think they were the three that were asked for. So we actually have a pretty decent level here, and we actually had a rejection on that level. We talked about that last week, potentially come back down here and bounce the upside. But now, because the overall market is down here on crypto, I probably expect that to be broken. I'd expect that to potentially come down into their 9.89. At the minute, there's less, what would you call it, sentiment to the upside on this. So I'd expect it to sort of get down to this level and then potentially break to the upside. So let's have a quick look at oil. So US oil. Now, the thing with oil is that I wanted to come back to this previous high. I wanted to come back to here and then shorted. So bounce, 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 bounce. I wanted to go up and then shorted, but it doesn't look like it's going to. It looks like it's come from that double top, and it looks like there's more selling power than buying at the minute. So I would expect this to probably come back down to there. Unless there's FOMC announcements, unless there's something sort of really good comes out on oil at the minute, I would probably, by the look of the market, it looks like it's heading back down there. Again, yes, we have a potential head and shoulder. So there's the head, there's the right shoulder, and there's the left shoulder. Absolutely, absolutely. But again, it's not as uniform. You could even say that that's a cup and handle, an upside down cup and handle. So there's loads of ways of looking at this. Okay, so but again, I expect this to eventually come back down at least to this floor here. So 1, 2, 3, and this will be the 4th touch on it. So that's what I expect to happen there. Natural gas. So again, this is what I want to happen on natural gas, but it doesn't look like it's going to happen. It looks like it's going to continue coming down from there. So what we're seeing at the minute is there's a little bit of a correlation between natural gas and oil at the minute. So when oil is dropping, natural gas seems to drop. Okay, so the two seem to drop at the minute. So keep an eye on those. And do we have gold and silver? It's on the green list. Okay, so silver. Silver for me, stay away from it. It's not one of these ones that are massively interested in trading. There is the potential buy if it hits the likes of this level again, but why would I trade something like this? It's not great. It's probably trending more than gold, okay, but again, it's not great. I wanted to break and retest the bottom before I would look to even look at this. I want that to break and then retest the bottom and then potentially short it. So, and then potentially short that. We look at gold. Again, gold is one of these ones that it is definitely not something that I am interested in at all. Where's the 1800 level? So that level just goes in there because it's 1800. About there as well. Okay, so a bounce, 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 and I definitely expected to see it hitting there. But if it breaks and retests, then the next level maybe off this here. If I get horizontal ray, would expect that to potentially come down. So this is, if it plays out like this, come down to there, retest back, I would expect that to come down and hit there. I don't see any reason why it wouldn't play out like that if we're looking to. And then the last one then is wheat. Wheat. Let's have a quick look. Okay, so wheat has sort of followed that little zone that we were looking at before. And we're back into that zone. Okay, segments. And then a trend line. We're back into that area. So is that a trade that we're looking to do, guys? Is that something we're looking to trade? If we're having a look at this channel. So entry above that green bar. Stop loss below it. Now, see that bar there, the stop loss is below the bar. Now, because this is the previous low, my stop loss would have to go below that. So see this previous low? My stop loss would have to go below that. So if I get the measuring tool and have a quick look at this, so entry's there. And my stop loss is there, which is 3.7. So just say 4, 3 4s are 12. And that is 8.5. So there's where I take profit, and that would be. So our take profit on that, a 3-to-1 take profit will be at that horizontal line there at that particular point. So is that a trade that you guys would take? So entry, stop loss, and my take profit there at 882.33. There's definitely a trade there. Definitely a trade there. I would definitely go have a quick look at seasonality and have a quick look and see, is it something that historically goes up in December/January? But again, there is definitely a trade there if you guys are looking at it. Okay, everyone, it's been an absolute pleasure. Anyone who's not in the free chat group, anyone who's not in there, let me know, and we can get you in, and we can get you chatting about trades and stuff like that. There, James has just stuck the Discord link up there for you guys. Anyone who's not in it, look, it's been an absolute pleasure. Thank you very much, anyone. So have a nice evening. Bye bye.